Hello everyone. What JP Morgan report is saying about Nifty? Second, what's new with Reliance AI investment? What, where and how much? And third, what happened in the US market last night? All this we are going to discuss in a regular market report video for today, 27th November 2025 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, after the Indian market closed, JP Morgan released detailed report about Indian market. Maybe I will come up with separate detailed video since it got lot of interesting and useful facts that could give some sense about where Indian market is heading in the next 12 months. In short, if required, please pause and have a look. The very best case scenario, they are expecting Nifty to reach 33,000 mark by end of 2026. Whereas in base case, in simple words, neutral case, they expect Nifty to reach 30,000 mark. On the other hand, in the worst case, bearish case scenario, Nifty to drop 8%, which is around 24,000. So overall, largely the report is positive, but they got different opinions on different sectors, like they were underweight on pharma and IT, whereas overweight on materials and finance. Anyway, as we discussed earlier in detail, we could see in separate video, but the takeaway is those sectors will be on focus today based on their rating. Then second, yesterday IMF has changed India's forex regime from stabilized to crawl-like way currency system. In 2022, when the previous governor took in charge, they moved it to stabilized currency system from free float. Now, not back to free float, but to crawl-like way. Here, stabilized means Rupee will be kept very stable by the RBI in the described band, whereas crawl-like way means it varies but based on the market demand, but slowly, like not more than 2%, up or down, whereas free float means fully driven by the market forces. I personally like and think that the stabilized currency is better from market perspective. But when I inquired it with ChatGPT, it said for the long-term investment for the developing economy, crawl-like way is much better than stabilized. Hence, in the long run, the demand and supply determine the currency value and it's good for investors kind of. Anyway, it's interesting information. I'm not sure about its influence on the Indian market, but worth knowing the info. Third, like TCS, Reliance also announced their new AI data center investment plan in Andhra Pradesh. It's not exclusively with Reliance, but as JV along with various global partners, they are going to invest near 1 lakh crore rupees worth of AI data center. We know last week TCS made an announcement that they are investing 20,000 crore rupees for AI data center, for which market reacted positively on the following day. But the problem is, I guess TCS is the IT company, so with the AI data center, there is a sync in the business model, whereas here I'm finding difficult to find the sync between Reliance and AI data center. Anyway, it would be interesting to see how market reacts to it today. Moving to US market, last night PCE inflation data supposed to be released, but that was rescheduled to December 5th. Whereas GDP growth data deferred to coming Friday. However, other macros such as Beige Book and Consumer Durable Goods Order were released, so US market did reacted for it. First regarding Beige Book, no major red flag worries regarding the economy. It mentioned there are signs for warning, but still the economic activity is stable. On the positive side, it said there is a reduction in spending by lower to middle income households. From the economy perspective, it's negative, but it's positive from the inflation perspective, since it's a direct demand reduction, which in turn increased the December month rate cut probability to above 80% chance that Fed will cut the interest rate by 25 basis points. And the durable goods wise, on month over month, it increased only 0.5%, which is way less compared to the previous month data, 3%. But still, it's in line with the expectation. Because of all those reasons, for the fourth session in a row, US market increased significantly. See, before these 4 sessions, because of no interest rate cut probability, S&P 500 fell about 5%, Now it recovered all those 5% like a V shape. So last night in the end, Dow Jones increased 0.67%, S&P 500 was up by 0.65% and Nasdaq increased 0.82%. In case of VIX, it further down by 7% and moved to 17. However, it seems US market positivity was not transferred to Indian ADR or GIFT Nifty. Indian ADR closed very much mixed, banking stocks and Infosys closed positive, whereas Wipro closed negative. If we calculate the arbitrage, ICICI Bank and Infosys showing positive 0.5 to 1% difference, HDFC Bank and Reliance GDR showing no fresh movement, whereas Wipro showing negative 1% difference. Then regarding GIFT Nifty, last night it moved about 26,425, but early morning today it fell and traded at 26,386. Equating that with the spot market, for now it's indicating flat to positive opening. As a summary, global momentum is really good. Because of the rate cut optimism, US market closed around 1% each of the last 4 sessions, including last night. Whereas in domestic case also, it seems we are going to have the rate cut next week and major research companies are giving their positive verdict. However, Indian ADR and GIFT Nifty indicating only mild positive opening. This could be 2 reasons. One, today BSE and Sensex monthly expiry, so maybe market might have some reservation. Then second, maybe because of buyers exhaustion. Anyway, moving on about institution. In the cash market for the second session in a row, both FII and DII were net buyers. FII net bought significant massive 4,800 crore rupees and DII net bought significant 6,250 crore rupees. So both institutions combined together yesterday the net bought for massive very close to 11,000 crore rupees. I mean, honestly, I don't remember any non-index rebalancing day where both FII and DII together net bought for this much amount. This is very positive. Moving to participant-wise open interest analysis, yesterday index future open interest increased 3.4%, whereas on the index options, 19.7% new call option open interest and 75.4% new put option open interest were added. Because of massive put option open interest addition, the PCR ratio improved to 1.42 from 0.97. Then stance-wise in the index options, client and proprietary traders holding net 2% and 4.2% of their open interest favoring bullish position, whereas on the other hand, FII having net 5.2% of their open interest favoring bearish position. In case of future index, client having 62% of their open interest respectively on the long side, whereas on the other hand, FII is holding massive 83% of their open interest on the short side and proprietary traders also having 60% on the short side. Then regarding the 25 delta risk reversal, yesterday the spot market increased significantly and closed at 26,205. And at that close for December 2nd expiry, the 25 delta call option strike is at 26,450 with the IV of 9.33%, whereas the 25 delta put option strike is at 26,000 with the IV of 10.56%. As we see, call options distance from the spot is 245 points and put options distance from the spot is 205 points. It's not massive and the 25 delta risk reversal is negative 1.23%. This is one of the largest negative risk reversal value we have seen so far. So the premium of put options is far higher than the premium for the call options, indicating a significant bearish skew despite the bullish price action yesterday. Please note this is the present situation. This could change when market opens as it's not including the last night US market positivity and GIFT Nifty factor. Then as per stock open interest, HDFC AMC, Airtel, Adani Enterprise, Nykaa, Titan India, LIC and Acre Motors are the 7 stocks that got an increase in open interest along with a negative close, which indicates the short built up. On the other hand, SAIL, Vodafone Idea, Yes Bank, BHEL, IDFC First Bank, Union Bank of India, Tata Steel, Suzlon and Federal Bank are some of the stocks that got an increase in open interest along with a positive price close, which means these stocks indicating the long build up. About the things to look out, today US market will be on holiday, whereas macro wise there is nothing that I'm aware of is scheduled release that could influence the market. Coming to technical, Nifty opened gap down to flat but immediately gained strength and increased throughout the session above 26,000 mark and closed above 26,200 mark. Thus on the daily chart, Nifty formed a big green candle almost engulfing all the previous 4 candles. In addition, it climbed back above the 10-day exponential moving average and sustained above the short as well as medium term moving averages by continuing the higher high higher low formation. Furthermore, RSI climbed to 63 with a positive crossover, while MACD also turned bullish. All this indicates strengthening momentum. Hence, as long as 26,000 support holds, a rally towards the record high near 26,300 followed by 26,500 is possible in the upcoming sessions. In case of Bank Nifty, it also showed Nifty-like performance by opening gap down to flat but immediately increasing and being positive throughout the session, then closed above 59,500. Thus on the daily chart, Bank Nifty formed a long bullish candle and sustained well above all key moving averages, maintaining the higher high higher low formation. In addition, RSI turned bullish at 70, while MACD is on the verge of a breakout on the higher side. All this indicates a continuation of the positive momentum and the likelihood of further upside. Hence, the immediate support is at 59,200 and on the upside, potential resistance is expected near the psychologically important 60,000 level. Regarding the options front, the maximum call option openers was at 26,500 strike followed by 27,000 and 26,200 with maximum new call option rating at 26,700, 26,500 and 27,000 strike. On the put side, the maximum openers was at 26,000 strike followed by 26,100 and 25,900 with maximum new put option rating at 26,000, 26,100 and 26,200 strike. Thus, from options data, it's indicated that 26,000 is expected to be strong immediate support with resistance at 26,500 to 26,700 zone. So that's all in this video. Hope you got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.